Good morning. How's everybody? Well, after yesterday's pre-market commentary, which I have to clarify, where we looked at the internals and talked about a stock market bottom, I kind of have my foot in my mouth here this morning, but not completely. I said that I've talked about the pattern and, how the internals could lead and how it was different than the past and all. So where are we now? Well, the internals have gotten to a point where, well, they haven't failed me in the past. That's for sure. They're actually pretty incredible as a guideline as to market bottoms. The tops, they're a little more difficult. They always are. Buyers kind of don't give it up, whereas bottoms come with a climactic kind of end a lot of times. And is this climactic right now? Not quite. I mean, not from the daily chart, from the intraday chart. Yesterday did get kind of climactic. However, regardless, when the internals get to the point where they have historically, it's always been close to some type of tradable opportunity. Yesterday talked about, is this a fantastic opportunity as it was the last time they got cooked like this and we went up for several months? Absolutely not. Can we trade it and make some money when the turn happens? Absolutely, yes. Now, what will typically happen in such a decline historically is that there will be a retest type of a pattern, somewhere where the initial rally, which virtually happens probably 90+% of the time, is followed by another decline. And then there are some divergences as to certain stocks showing relative strength on the decline, which we see through the internals. And that's where the bigger move happens. And that's what happened earlier this year, months ago, where you had a retest, you had a tightening up of the pattern. So when the internals reach the point that they are right now, it's a decent swing trading opportunity that will typically last several days. So that's what we're looking for. Whether it's coming before Christmas, doesn't seem that way. It seems like this is going to be, coal in the stocking type of situation as far as next Tuesday goes. But let's see what shapes up here and take a look at what's going on. So here's our spider chart, S&P 500. And so why isn't it climactic intraday? Because we've had this consolidation that lasted almost 2 months where buyers tried to hold it here. You can see the reversal here, the gap, little island reversal there, and the bottoming tail there. And now that failed. So all of these buyers that were holding here, and maybe some that bought along the way, their stops got hit. And so things started to break down. And then the uncertainty about FOMC yesterday, maybe they're going to save the day and things will turn around. Well, they didn't. And down the slide it went. And so now we're chopping around down here pre-market. So let's just take a look at the charts and then we'll see where those internals are right now. Qs, pretty much the same thing. Started down. This is not a climactic type of pattern. Yes, that isn't. And looking at this, let's just look at it on a 5 or a 15. It looks a bit more dramatic, as you can see. Boom. And this is where I alerted the room. I saw so many shorts. I was like beside myself as to what to say or which one. And I just said short the Russell here. And I don't know if any of you did it at the time, but the 2 and the 5 minute were just beautiful setups. And bam, down it went. And, it stalled at the prior low, which typically happens, and then the next collapse. So it was just, honestly, when I looked at my screens and where I have, 3 screens of 5-minute charts there, it was actually like Christmas, where, there were all these presents under the tree and I didn't know which one to go to first, and was frustrated to say to you guys in the room, what to hit here, because it was a historical, perfect kind of textbook setup that doesn't happen as much anymore. In any event, down it went. That is a climactic kind of setup. And so far, it hasn't been able to lift off to do anything. And then this double top that happened pre-market here. So we'll look at the futures in a moment to see what that looks like. There's the Russell, which was already leading the way down. And, there was that beautiful 5-minute sell setup. It's just textbook. Crack back into minor resistance, topping tails. And, again, back in the late 90s, early 90s, I mean, this was every day almost that you saw this kind of setup. The algorithms today have kind of screwed with this setup and more wiggles with it. But, it was a marvelous many years ago. And when I saw my screens yesterday, and it was like, what? Really? A gift from the past? And down it went. Today, you get more wiggles and erratic type of movements around that pattern. In any event, thought I'd show it to you. Transport's leading the way down, and a major concern as to this recession that's been talked about. And look, the talking heads don't mean a damn thing to us. But that doesn't mean none of them are right. What we look for is when our market internal gauges and patterns and intermarket analysis lines up with what some of them might be saying, because there's always going to be some that are right. They took my classes, so it was my fault. I'll take the hit for that. But the ones that are right, the ones that are wrong, maybe they didn't study afterwards, but thanks, George. So here we go. The transports are going down. We have yield curves that are narrowing, and historically that has led to a recession. So before we get to the futures, I still got some time here. Here is the chart that I showed you all yesterday of the yield curves. And you can see they're getting dangerously close to that zero line, which means they have inverted. And these are different maturities of different yields that are being compared to each other. So once the shorter term yield gets above the longer term yield, this line goes below zero. And when that has happened historically, and I don't have the S&P chart on it, but take my word for it, a crushing bear market has happened afterwards. So here you have 2007. The other one was back in 2000. And there's a lead time to it. But when this happens, you get into market analysis that supports it, like this, where transportation stocks are going down. And obviously they are. So we're going to keep an eye on those yield curves. And you see the transports now are completing what was about a measured move, and they're coming down into this support here. So the idea of our market internals, which I'll show you quickly here, and then we'll get to the futures, getting to bullish levels. So the sentiment here, this moving average is now down to 1.2. You can see where it was the last time. But if I go further back in time where the big move happened, you'll see that we had a bullish price pattern as well, which we didn't have yesterday. So while our internals had reached a level to pay attention to, we never got a signal from the daily chart, which is what has to happen for us to do it on a swing trading basis. However, that doesn't mean intraday. Good morning, Jeff. That intraday we won't get on early. Now, so sentiment has reached a historical extreme. Sentiment has reached a historical extreme. And one of the things I mentioned earlier in the week was that, look, on a big market decline, and there's nothing to say this isn't going down today too. Maybe it will. Makes sense that it would. And I hope it does, tell you the truth, that it gets even further extended from these moving averages and this resistance, is this value, this internal gauge here could get down around minus 300. And I have never seen the market refuse to advance from that level. So we'll keep an eye on this during the day. We do use it on a closing basis. But if this gets down, it's already here. But if it was to get down to 250, 300, we're going to be looking for that short-term reversal. So we'll see how that shapes up. And this is the day-to-day put-call ratio. So there was a little less put buying yesterday, which why? I don't know. You would think there'd be more. This is into the close, but we'll see what they do today. And so let's go back to daily chart. And some people giving me some comments on YouTube there. And LaDon, we're waiting for you. Come in the room. Hey, Tim. Guys, those of you that are in here, please give us a thumbs up here on YouTube and share the channel. Let's keep going here. So there's our daily chart. And we don't have to look. Well, we could look at the Dow quickly. Same thing, same story there. Futures, they're down here. There's that support level down here. And you can see the whipsaw that happened yesterday. There's the 5-minute little rally and pullback. But I like to look at this on a 60 pre-market. Puts it in perspective. So there's the retest. And so maybe it'll stabilize here. It was a big down move yesterday. So we'll assess that as it happens. The NASDAQ futures, same story there, move down as the Dow, and it doesn't always shape up this way where all of these contracts look the same way. There's always these differences between them or which one shows relative strength or weakness, but it's a little unusual, honestly, that they're all showing the same picture of these patterns in unison. Does that mean anything? I don't know. I don't think so, but I'm just pointing it out because it just caught my eye. Bonds continue to go up, which means yields are going down, which is going to bring this closer to that zero line. This is the opposite. Well, the yields go down, this goes up, and this is comparing against shorter term yields, which the Fed raised interest rates, which is going to prop them up, which is theoretically going to make this invert, and then there's not going to be.
Hey Greg, how this 5-bar up move in the bonds there? How quick will that adjust those yield curves you just showed? Like how lagging is that line?
Well, there's the yields. That's the 30-year, and so there it is.
Right, but on the line you just saw, it didn't seem as rapid. That's what I mean.
Never gave it a thought. You know me, Dan. I try to keep it simple, stupid, and I just look at the line, and if it's at zero or getting close to it, it's a worry. When it hits zero, we'll all know it. Yeah. So, where was I? Oil. There's another confirmation of recession. It's like, why is that? Because this is based on supply and demand. And if nobody wants this crude oil that's used in the manufacturing of a lot of products, that's a bad sign for the economy. Yields going down is a bad sign for the economy. Why do yields go down? Nobody wants the money. Right? Interest rates go up because there's a demand for money. And if nobody wants it, right, it's like the yields go down, make it more attractive. Alex is pointing out, I guess that's the high yield ETF. Nobody even wants the junk, which has the higher yields. This is a bad sign, right? So it's like, yes, that yield curve is going to invert. Of course, we're going to wait for that to happen. There's always quite a lag time before the bear market hits. I mean, you say, okay, here's the beginning of it, but there'll be some kind of counter trend rally along the way. And so maybe all of this BS in Washington and this trade stuff, and who knows? It's guys, I guess, having some effect in 2019 is certainly going to be interesting, and I think there'll be more volatility, which is great for us as intraday traders. Wow, gold reversed. That is interesting because eventually, it had turned down on the increase in the Fed funds, and now they're back up. So this is really kind of like a wrench, throwing a wrench in all the little plan there. Is like, why is gold going up? Now we know that it's holiday time and all that, but one of the reasons gold goes up is because of a fear of inflation. So what you look for is, okay, gold going up, yields are going up, commodities are going up. That's not happening, right? So it doesn't always line up textbook perfect, but there you have it. Take over, Dan.
All right, good morning. This is going to be the fastest review of open positions ever. We only have one. We took profits on the shorts. We have a Twitter way out of the money put spread. The 30's way down here. You know what we could have thought about doing is legging into an iron condor, but we'll keep an eye on it. Let's look at some gappers and some leftover stocks from our watch list yesterday. Budweiser, InBev, you know, they merged. Ugly downtrend, but gapping up a little bit. They're doing a deal with Tilray, marijuana stock. Where are you? So this is actually, you know, maybe we'd get a put spread for tomorrow. That's going to be my mindset. If we get this reversal that we're talking about, whether it be a 30-minute high, another climactic buy setup. Remember yesterday I told you I would love to have a 1,000-point gap down. Well, it's kind of, I mean, looking at these 15-minute charts, it's like almost identical to where we left off yesterday, just slopping around here near the lows. So until we get, you know, an event, something of a reversal, this to me just looks like a continuation to go lower. But I have no interest in Bud there. ADI, I thought I saw it gapping down, but look at this breakout failure. This is a bear call spread candidate. This little guy is up. Agent sounds like a bio. That's a big bullish gap. Well, let's keep an eye on him. It trades reasonably. You know, sometimes you hear me say it looks like a penny stock junk, but no, this looks tradable. CC, I think, had earnings today. That's a powerful, ugly downtrend. Look at these. When you get railroad track, 2050 going down like this, that's a power trend. And remember yesterday's MT Live, how do you get on board a moving train? Look, right under this low right there would have been a no-brainer. Multi-week trading range, 100% retracement, bottoming tail. And then I got 1, 2, 3 more bars at the low. This is what I call the cliffhanger. It's just holding on by its fingernails. CAG had earnings, gapping down. 2760, I wish it was gapping down more. And then it would be a gap and snap candidate. ACN had earnings, bearish gap, 145. We'll keep an eye on that. Tro, this was left over on my short watch list. See, here's the cliffhanger again. And I remember talking to Alex about this the other day, and that's exactly what I said. Look, this almost looks pretty darn close like that other one I said. 100% retracement, one little green bar, tight. Look at that, closing at the low. Boom, yesterday was the entry to short under Tuesday's low. EQIX, hey, this is even better now. It's a pat, it's an illusory 1, 2, 3, 4. I'm gonna put that in a thumbnail. So it had a lower low, lower high, individual bar. Look, that's another cliffhanger. There's nothing to the left. I'm watching these pot stocks all the time. Remember yesterday I said there's not a potent reversal. And you can see momentum slowed, but it went nowhere. But we'll see. Facebook, I read in the journal. Yeah, imaginary 1, 2, 3, 4. Facebook under pressure again. Wow, look at the volume yesterday. That's ugly volume. DC is suing them for privacy breaches. J&J, in the news over its asbestos mess, high volatility. I would love that to sell off another $5.
Hey, Dan.
Yep.
Someone on YouTube saying that they're legging in Tesla credit spreads, Jan 18 and 25th from 380, 395 to 420 to 435 as it's gone up. What's a good time to close those out?
Wait. I'm confused. It's as what's gone up. The stock's falling, and if you're short a call spread, that should be falling, profitable.
Here's the question.
Oh, I've been looking. Oh, January 8th. Okay. From 380, 395. Perfect. As it's gone up. See, that's where I'm confused. So it must be gone up. This is when it went up. Easy. I think the answer is you just trail it over a prior bar's high and you collect your money. Because remember, when you sell credit spreads or naked options, either one, we profit from 3 of the Greeks. And Greg loves Greek alphabets.
Only Greek food, tell you the truth.
Directional. So selling call spreads is a bearish position. So the directional, you're winning. So those deltas are getting smaller as the stock falls. So you're profiting from delta. You're profiting from time decay. And you're also, you aren't profiting on Vega on this case, because with the market selling off, implied volatility has likely risen over the last few days. But, any negative effect of your Vega, you're still being compensated for by the directional fall. So that's my answer. Just trail over prior bar's high, at least for half. You can maybe pivot half for the back half. It depends on your trading plan. And then also you can time it with FDN, the sector. Was Tesla in FDN actually? No, it shouldn't be. I don't know. Sometimes I look at FDN, I lump all the FANG stocks in there. But, you can time it with the broader market also. So if you get a climactic sell-off on Tesla corresponding with the market, then just take your money. Oh, okay. All right. Thanks, Paul. Yeah, people are really loving our MT Live, saying they learned so much. We're getting a lot of emails. This was one, we had a beautiful put spread last week, and we closed it out at 5 cents, like the champ. And Pat, my credit spread manager, helped me decide to, she was singing the song about time to go. And I've been watching it on a pullback here to do it again. So over yesterday's high, we can do a put spread on that. Sienna, I was watching this to sell a put spread also because of the weekly and monthly breakout. But I'm waiting for a potent reversal button. VXX, as you know, we're going to be trading this when we get our trigger from the spider sell-off. USO and all 3 or 4 of those. All those oil ETFs, we will trade them. That is a mathematical certainty. We will be trading those in due course. I don't know when, because they're in nasty downtrends, but we will. And just as a reminder, again, we do January 2nd, RMT Live. We're going to do it on a market review, 2019 market review, and dumpster diving. We're going to look for beat up stocks that have the propensity to make a big move. So we don't care. I don't care one iota about fundamental analysis. We're technicians, and if we get a nice entry, we're gonna buy it. Look at this one's on our dumpster diving list. Isn't that, well, I can't say it's funny, it's kind of ironic. Do you remember 20 years ago, GE was, I think, the most valuable company in the world, and now it's in our dumpster diving list. What a crazy, you know, what's the opposite of turnaround story? What's the opposite of turnaround? That's what GE, it's an amazing destruction of value story, whatever word that means.